Good afternoon or good morning, and welcome to our webinar. Today's webinar is entitled ESG, Municipal Finance Lens and Diving into Planning. Before we start our webinar, we'll have some introductions by our panelists. Susan, go ahead.
Hi, I'm Susan Reed. I'm a managing director within Baker Tilly's public sector, specifically the municipal advisory section, and I am helping lead our ESG efforts. And my career and background really began with state government, where I worked with community and economic development in that role. I'm a lawyer by background, a bond counsel, and then have experience working in a public power entity. And in that capacity, I worked with communities that were served by the public power utility, doing community and economic development and federal relations. And then I joined Baker Tilly, and it's been my pleasure to do disclosure work for issuers that are going out to publicly sell bonds. And I also work a lot with rating strategies for issuers as well. Caitlin?
Thanks, Susan. Hi, everybody. My name is Caitlin Hummerkaus. I'm a director in Baker Tilly's public sector advisory practice. So that practice does anything from risk and internal audit type work to management consulting projects. So strategy, succession planning, organizational redesign, co-sourced and outsourced internal audit, system selection, sort of you name it. I've been with Baker Tilly for about 12 years now, and I serve exclusively the public sector. So I work with primarily local governments, publicly owned utilities, tribal nations, K through 12 school districts, and nonprofits. And I'm really at the intersection of setting strategy and then tying that to operations and helping organizations understand how they can use the resources that they have access to really achieve that strategy. And I'll turn it over to Dave.
Thank you. And my name's Dave Erdman. I've been with Baker Tilly for just less than a year. Prior to joining Baker Tilly, I was a longtime state issuer for the state of Wisconsin. In that issuer realm, I was involved with working with some national organizations addressing initiatives and strategies related to the public finance arena, and some of those included ESG. So with that, we will start our presentation. First, a little bit about Baker Tilly. We're a leading advisory CPA firm covering coast to coast and global customers. We provide a wide range of services in the area of assurance, consulting, ESG, risk, tax, transactions in many industries, including construction, energy, healthcare, higher ed, and government. With respect to government, some more information about the footprint of Baker Tilly. We have 90 years of public sector experience, and we serve 4,200 public sector clients and have over 525 employees focused on the public sector. With respect to the municipal advisor space, we have over 90 registered municipal advisors providing municipal advisor services to our clients. Today's key objectives, there's four of them that are listed here. First, we'll learn a little bit about what ESG is. We spent some time in our first webinar a couple of weeks ago diving into ESG, so this will be a quick overview as to what ESG is and how it's important to our industry. Next, we'll identify and discuss some strategies for ESG assessments and planning related to ESG. Next, we'll also do some ESG assessments and address the materiality as to how it relates to rating agency considerations, disclosures, and investor outreach. And finally, we'll learn about the growth in bond designations and consideration for designating bonds. In short, we'll be planning and identifying and assessing ESG risk and the opportunities that will come about from those ESG risk and opportunities, both as they relate to your overall organization structure and operations and finance. With that, I'll turn it over to Susan to talk about what is ESG.
Great. Thanks, Dave. Appreciate it. As you mentioned, in our first webinar, we really spent time discussing in depth what ESG is and providing some examples. If you were unable to attend and would like more of a 101 on that, we would encourage you to watch the recording of that webinar. However, we will spend a little time providing an overview to make sure that everyone has a basic foundation of what ESG is. ESG stands for environmental, social, and governance factors that affect an organization's risk and opportunities, both financially and through operations. To understand ESG and its complexities of defining what it is, it's important to consider where it started and how it's evolved. ESG began through international investor interest to have better and more complete disclosure around these issues. And in recent years, ESG has also become more prevalent in the US market. Additionally, interest in ESG and assessments and disclosures grew. They became more useful as tools really for organizations to have a set of metrics that can be used to guide operations and drive sustainable outcomes. ESG provides more of a holistic assessment and ability for governments, corporations, utilities to sustain operations and financial stability when um, assessed in conjunction with its financial statements. So, really, that third bottom line, things that don't appear on the financial statements themselves, can better be seen with the ESG lens. Additionally, it enables governments, businesses to assess operation models and mitigate risk and capitalize on opportunities as well. ESG is currently being discussed in a great deal due to investor interest and management team's desire to address these important issues both within corporations but also within government units that would include utilities, universities, and K-12 schools. So when we're really looking, at those variety of factors that have been raised, the visibility and importance of ESG really is, in these buckets, which include environmental, social, and government related things that um, drive the success of units of government. So when you think of these factors and their importance, you think of such things that have occurred recently, such as the economic and social and operational disruptions that happen really in conjunction with COVID. When you think of the major climate related disasters that have occurred in recent years, and the increased occurrences that have resulted from climate change, these are things that fall in these buckets as well. Um, so when you're looking at specifically, you may be thinking, the environmental component that is there. With climate change, you're looking at things that relate to carbon emissions and the footprint and measurements that both units of government, utilities in particular, and corporations are looking at. Specific things that may be affecting your unit of government as to where it's situated. Certainly Florida has experienced a number of climate related vulnerabilities recently, but they also hit places, such as the Midwest around a tornado and the propensity for tornadoes to occur. When you're looking at things like natural resources, it's the preservation of natural resources, and really looking at land use, pollution, and waste. Really, every community has the need to address potential pollution that occurs in conjunction with wastewater utilities, with clean water. So those are pieces too that fall into the pollution and waste bucket. And then looking at environmental opportunities, so supporting initiatives around clean tech in your community, to the extent that you have um, industries that are helping support the production of electric vehicles. That would be a piece that would be an ESG factor, and certainly they'd be really interested as they're making decisions as companies about what you're doing in a community to support things that dovetail to their initiatives around green transit. Social issues also have a number of things that are important in a variety of ways, both really internally and externally. So when you're looking at social impacts, meaningful impacts on operations, these things include human capital, diversity, equity, and inclusion, and things that really affect the health of communities. And the organizations and corporations really operating in them, like affordable housing, access to infrastructure like broadband. When you think of, again, that COVID pandemic that we're coming out of, essential um, access to broadband, was huge with being able to learn remotely for schools, the ability to work for many companies, and really just generally having an understanding of underserved community stakeholders is important with things like transportation to work, childcare, and healthcare. I remember really talking to clients at the height of the pandemic and, looking at things that were affecting them, like um, realizing that governments and school corporations really were the engine that helped serve the underprivileged during that time, and provided access to food and meals, PPE, and broadband to allow really communities to continue to operate during the lockdown. Internally, the focus of social really includes programming for your employees, addressing things again like DEI, or which is diversity, equity, and inclusion in the workplace. Safe working environments, including such things as stand-up desk and ergonomic equipment, in addition to the traditional OSHA safety considerations, and things like philanthropic outreach. Um, Governance is really the remaining piece of the puzzle, and governments, it focuses, probably the most prevalent focus there is around for both public companies and government companies, are things around financial transparency, pensions, and risk mitigation. And post COVID 19 as well, the cybersecurity issue is probably the most prominent and emerging issue that will continue. um, I think every unit of government, every company recognizes that cybersecurity is in fact a risk that has to be mitigated, and the degree to which organizations are able to tackle that and really have success in mitigating it is something that really resonates with investors, because it has not only a financial impact potentially, but an operational impact. And when you think of critical services like utility services, and the ability for those services to continue, even during a cyber attack, that's something that really is on the minds of many investors and stakeholders in communities. Also, succession planning, looking again at operations and the ability for organizations, both companies, but really a lot with governmental entities, with utilities, where you're looking at the ability to provide adequate staffing and to continue those essential services into the future, not having a lot of institutional knowledge walking out the door. Those are things that also are critical, as well as having enough overlapping staffing in place to continue operations, during challenges that may occur um, at any organization. Okay, next slide, please. So focusing on ESG is imperative. ESG is evolved from just being information that is externally provided for disclosure and for investors, to a useful tool to assist with an organization's sustainability strategy, and also to assess important issues. From an internal perspective, it's also important to assist with the attraction of talent, as employees want to work for organizations that are good corporate citizens and also manage risk. It can signal to investors, residents, and corporate partners that you are committed to improving the quality of life in your community and protecting the environment as a part of this. First, there is an investor, corporate, and partner and citizen interest, and this results in the potential for regulation, including a pending SEC rule, which we'll discuss on subsequent slides. On one hand, having a consistent approach to disclosure is positive. However, as with any regulation, there are concerns that there, and certainly will be challenges with the implementation of a federal rule. Investors hope that it provides more consistent and comparable data that will be easier to interpret and more transparent around ESG related issues. Specifically, the SEC rule that's pending relates to climate related disclosures, the one that is most prominently being discussed. Investors believe that ESG factors are predictive of long-term risk um, adjusted returns, and are beginning to see factors that are very important in metrics for a decision-making process. Shareholder pressure, regulatory developments, customers and vendors, supply chain, and employee demands are all contributing to this evolution. And as I mentioned before, we are in a very competitive economy for employees, both to attract and retain them. And even with the anticipated slight recession for 2023, it's still anticipated that employees will be something that employers have to compete for talent. Recent prominent employees surveys indicate that employees are really looking for a workplace that supports their beliefs and values. And this is becoming even more prominent with the younger generations like Generation Z. Okay, next slide, please. So when you're looking at, again, the competing frameworks, one of the things that we are seeing is that their ESG related frameworks are really continuing to become one of the things that investors are really looking to have more foundation around, and that the lack of one framework provides some inconsistency in the standards that are applied to different companies. While most of these standards are specific to publicly traded companies, this affects standards indirectly affect companies in the supply chain as well as units of government. And really, a lot of the frameworks and regulations that the public sector follows come from guidance that is provided to publicly traded companies. A lot of the SEC rules that apply to publicly traded companies, in turn, are used for the interpretation of what applies to the municipal market, for example. There's no right or wrong answer, and none of these are mandated as of yet in the US. Initiatives are underway, as I mentioned, to develop universal sets of standards and to consolidate these different frameworks into one. But really, the challenge is that these frameworks don't just extend within the U.S., but they do extend internationally. Within the U.S., the SASB, or the Sustainable Accounting Standards Board, is one of the more widely known ESG frameworks. And there are also a variety of types of guidance that have been released by various organizations. This is its challenges as well, because again, these issues kind of internationally uh, still apply to companies. So if you have a company, for example, that has sales within the US or provides services within the US, but then also is providing services in other parts of the world, they may have competing standards really governing the same kinds of issues around ESG, but yet having to figure out these competing frameworks. And I share this with the next slide. We were talking about the SEC rule that is pending. And as you can see here, there is a diagram that shows the different kinds of scopes that are proposed to be monitored as a part of this rule. So while this slide may look overwhelming to you, if you can look to the middle of it, I really think that it's a great diagram to help explain the impacts that this proposed SEC rule could have um, on governmental units of different types, and how it fits and applies feasibly to your operation. So scope one is direct emissions for these publicly traded companies that fall under the scope one emissions umbrella. Scope two is utilities that provide services to those publicly traded companies. So if there is a public power utility, or really any utility in a community that is serving a company that's publicly traded, that also will be captured under the new rule. But probably the most important piece is when you look at scopes three that go both to the inputs in the supply chains to publicly traded companies, and the where they sell into the marketplace. So where they then in turn put their supplies into the marketplace, you can see that scope three indirectly captures a number of companies, units of government that will be pertinent to the company's reporting requirements. So on the next slide, just kind of summarizing that. So when you look at the SEC impacts, really the SEC impacts are such that Scope 1 and 2 emissions for publicly traded companies, and possibly Scope 3 will be captured under the proposed rule. And while there's some challenges to this SEC rule pending, it is progressing, but slower than it was originally planned. It's still planned to be rolled out here in 2023. Scope 3 tracking will affect supply chains of these publicly traded companies, and this will include other companies, in communities. And, many publicly traded companies are already reporting this, so it's not as big of a deal to them. But, this will be, increasingly important to smaller companies as well that will indirectly get captured under this umbrella, as well as governmental units. So, what we anticipate is that this rule will trigger more requests from companies for this information, additional investor pressure, and expectations for disclosure for public finance to mirror these publicly traded companies around disclosure, though that we'll discuss later as well. Dave will hop into. So, one of the things that we wanted to discuss is really how broadly ESG touches many of the things that governmental units, including again schools, utilities, K through 12, operations, universities, do. And looking, at this slide, we wanted to take a few minutes to dive in and talk that through and what that really means to you and what you should be thinking about. So, with that, I'm going to have Dave touch on this first few things. We're going to tag team this slide.
Okay, thanks, Susan. And again, ESG is a current buzzword. It's grown in the last 4 or 5 years, but as people have probably concluded by now, is that ESG basically is just the basics of government, the blocking and tackling, everything that governments have to do. With respect to municipal finance, ESG does get involved with respect to disclosure and rating strategies, and we'll talk more about bond designations later today. Investor outreach and pricing considerations. There's a lot of discussion lately about green bonds and what the benefit of doing a designated bond is. As ESG continues to grow, getting the lowest cost of capital is going to be a long-term marathon, not a short-term race. So preparing and addressing ESG in the area of municipal finance will have long-term financial benefits, to an issuer as they go through financial strategies. As for risk assessments, the top middle row, identifying what those risks are and the mitigation strategies. Cybersecurity is one that got pointed to earlier in Susan's presentation. Unfunded pension liabilities is another one, as to how a community underneath the G of ESG will address its unfunded pension or post-employment benefit liabilities and mandates that might be out there. So those are just a couple in the area of the financial area. Susan, you want to address a couple more?
Yeah, absolutely. So when you're looking at energy strategies, and this is something that units of government, are really starting to think about much more actively than you would have seen in recent years. For example, when you think of climate transition planning, you're likely to get, even place more pressure on your utilities to provide that information to you about what their plans are. So you have some idea of how that may impact your rates and just overall have an idea of what their plans are to reduce greenhouse gas emissions. We are funding units of government with sustainable planning that have, greenhouse gas emission tracking as a component of that, and energy projects that they're doing to help again support and encourage community stakeholders to do, such as EV charging facilities at public places, um, net zero strategy development, things that basically are much more active around this energy strategy space. And honestly, it's a great opportunity to do that with some of the federal tax credits under the Inflation Reduction Act, as well as other federal initiatives that are out there in grant funding. From a financial transparency perspective, this is sort of the nuts and bolts of the government piece, the governance piece. When you're really looking at how much you can tell by looking at their financial reporting, comprehensive annual financial reports development, and then also really just ESG discussions. Again, providing things that wouldn't be incorporated into traditional financial statements that really do have both risk as well as, to the extent that there's great operational planning around risk mitigation, and really just kind of operational savings through things like the deployment of electric vehicles and perhaps what that offsets in fuel costs. So there's some really good places of financial transparency that feed into ESG too. With the assurance umbrella, there really are, a variety of pieces too for post issuance assurances for debt obligations. I mean, to the extent that issuers issue debt and say that they are going to use that debt for perhaps a green or social or a sustainable use that we'll talk about later. That post issuance compliance piece to be able to go back and say that actually the things that were said that were going to be done or done, and having that independent look to make sure that that actually occurred. That's one of the things that is out there, and something that issuers should think about when making those representations to the market, because that certainly can help encourage investors who want to make sure that it's not being a greenwashed bond, that in fact has occurred, that is an investment positive consideration. Caitlin, do you want to hit on planning?
Sure. Thanks, Susan. So as Dave alluded to earlier, ESG is public sector, right? The things that we worry about as public sector leaders, the things that our citizens, our stakeholders, our members want us to be talking about and planning for, those all tie back to an ESG tenant or an ESG opportunity or issue. And so really planning for that, developing a strategy around it, getting your arms around as an organization, how does an ESG strategy overlay and play into other plans that we may already have in place, a strategic plan, a housing, community, and economic development plan, regional planning, regional transportation planning. How do these things all play into an overall ESG strategy, and how do we tell our story as an organization is a really important piece of all of this. You can go to the next slide, please. Next one, thank you. So, when we think about the organizations that are really going to be able, in the public sector, that are really going to be able to take advantage of the ESG movement and discussion, it's those that are proactively planning now, that are getting ready to develop what's our philosophy related to ESG, what is our strategy, how are we going to communicate that to the public, to our stakeholders, to potential investors. Those are the folks that are going to be able to really take advantage of this movement as it gets some more groundswell in the public sector. And so if you've ever been through a strategic planning process, what's up on my screen for you right now is going to look very similar to a process that you would have went through in that. The methodology is not a lot different. We're talking about looking at things through a different lens, through an ESG lens. You can go ahead to the next slide. And when we talk about the universe of ESG issues, this says sustainability issues at the top of the slide. And, I think a lot of the conversation around ESG, especially if people haven't done a deep dive into it, right, they think only about sustainability sometimes. And it's a much broader conversation than that. This is from the Sustainability Accounting Standards Board, and they're non-industry specific. So you're going to see things up here that aren't, specific or maybe relevant in public sector, that have more private sector relevance. But there are things up here that we all deal with as part of our organization. So anything from, what are the ecological impacts of some of our capital improvement projects, to how are we managing our human capital? Do we have a diverse and equitable workspace? Are we able to retain the talent we need to have good governance? Are we keeping track of things like our cybersecurity risk, and are we prepared for that? And there may be things that you're doing as an organization that fall into many of these categories. So a good example, this was probably 3 or 4 years ago now. There was a community in the Chicago area, and they had a history of, every time they got heavy rains, they flooded really badly. So they had a stormwater management issue. And they chose to address that issue through really innovative and green infrastructure. So things like porous roads and stormwater retention, underneath the roads to help with that. And so they solved this flooding problem for their community using green infrastructure. And so obviously we can see that that would fall into that water and wastewater management category, but it also falls into access and affordability. If you're a homeowner in that town, right, and every time it rains, your basement floods, that's an affordability issue for you. That's a placemaking issue for that community. And then that also falls into physical impacts of climate change, right? That community outside of Chicago probably knew, certainly this flooding problem is not going to go away. It's not going to stop raining, and it may actually get worse over time. So let's do something about this now, and have some direct benefits to our community in a way that incorporates green infrastructure. So really innovative. And the point of this slide is really to say, there's a lot out there that can be tied to what your ESG story and what your ESG strategy looks like in your organization. So how do we start to get our arms around all of that? You can go ahead. Thank you. So that's really where we start to assess, what does our current state look like? There are probably things that you're already doing that are related to ESG, and you're just not capturing it in that light or looking at it through that lens or having that discussion. And all of you are here today because you have some interest in ESG, right? But maybe not every leader in your organization is educated. And so that's really the first step, is to make sure your elected officials, the senior leaders in your organization, understand what ESG is, understand what the potential impacts are on the industry, and that everybody is starting from the same page in their ability to have a discussion around these topics. And then you really want to be able to distill, what does ESG mean for my organization? What's important? And we'll talk through a couple tools here, but what's most important is that you're capturing both the internal and the external perspective. And so looking internally, you can do something what's called a maturity assessment. So looking at the whole universe of ESG issues or ESG opportunities and rating yourself as an organization of, where do we fall, current state, in how we've addressed these issues. What have we done? What programs do we have in place? What plans do we have in place? And get a real accurate view of where you are for each of these on a scale. That's really the internal only perspective. When you start to bring in the external perspective, again, if you've gone through a strategic planning process, you probably know how important it is to get that citizen, stakeholder, community engagement piece. And there's a variety of ways to do that and understand what's important to your community and your stakeholders, whether that's a survey, focus groups, large town halls. The point is, you want this feedback to be broad and you want it to be diverse, so that you're really getting a clear sense of what's important today and what's important 20 years from now. What's going to make your community a great place to live in the eyes of your citizens in 20 years? What's going to make your community a great place to invest in and continue to invest in for the businesses that are in your community? So pulling that perspective in. And then finally, you could do what's called a risk assessment. And I know there's a lot of internal audit folks on the line, so this won't be new to you. We'll pull up an example of this in a minute, but a risk assessment really takes into account both your internal environment and your external environment, and the risks that might create for you as an organization. It really tries to understand, what is our risk universe and what is the potential impact to the organization. So this is just a sample risk map for a fictional organization. And I know some of this may be difficult to see. And again, for you internal audit folks on the line, this won't be new to you, but the way that we talk about risk, when we talk about enterprise risk management, is the potential impact of that risk to your organization, as well as the likelihood of it occurring. And that allows you to, again, really funnel down on what you want to focus on. And so as you move into that very top red-orange box, right, those are sort of the burning fires that you're going to want to address first as part of an ESG strategy, because they may have a high likelihood of occurring given your current risk environment, and they would have a big impact on your organization. So you may not be able to see this, it's a little small, but the one kind of closest to the top right box there is human rights and community relations. And as much as some of us kind of want to not address it, right, or hope that it doesn't happen to our community, when we work in the public sector, we're in the fishbowl, right? we're all, one day away from having something happen in our community or our organization that now suddenly we're a news headline, right? Now suddenly we maybe have strained relations with our community, or something that, an unplanned event that we have to put the fire out, and that totally pulls us off course from everything else strategic that we were trying to do. And so that's a big risk. So, using this tool would allow you to say, that's something that I want to address in my ESG strategy, so that I'm not only, changing the way that I do things in my organization to reduce the likelihood of that happening, but also, if it does happen, that the impact to my organization would be smaller and that I would be prepared to handle it. So at this point in the process, what you've done as an organization is done that distilling. What do we know where we're at current state. We know what's important to us as an organization and what's important to our community. How do we prioritize now and really develop what our plan looks like? And you can use something like a materiality assessment. This can just be a facilitated conversation where you say, these are our top 5 or 10 priorities related to ESG. And then you start building that roadmap and action plan. So how are we going to, measure our progress towards these goals? How are we going to report on that? And then most importantly, how are we going to create a governance and oversight structure to make sure that there's accountability in this process and that we're doing what we put in our plan? And a lot of people skip straight from, develop the plan to execute the plan, and they don't pause and do the communication. I really feel strongly that one of the biggest, benefits of having an ESG strategy in the public sector is the ability for you to use it to tell your story. And so earlier on one of her slides, Susan had a data point that about the Gen Z workforce, right? So expectations are really high in the environment we're in. Stakes are really high. And the ability for you as an organization to tell your story to, potential employees, to investors, is really important. That statistic that was on Susan's slide earlier was 83% of the Gen Z workforce consider a company's purpose when they decide where to work. And 90% of them believe that companies or organizations should be acting to address social and environmental issues. So when you think about your ability to recruit and retain employees, an ESG strategy can help you do that. Anecdotally, we're hearing from the economic development work that we do that developers, others are starting to consider in their site selection process the ESG strategy of the communities that are under consideration. If you're involved in the economic development world, right, placemaking has been a big topic for a long time, right? That's not a new word to us, but how do we make our community a great place to live? How do we do, a good job at population retention and population growth? Those concepts related to placemaking, livability, walkability, good governance and trust in government, those are all core tenets of ESG. So an ESG strategy can help you with your community and economic development. It can help you with your workforce retention and recruitment. It can help you get access to new avenues of funding. And so understanding what that audience looks like for you and having a way to communicate what your strategy is where you'll really see the benefit of putting this work into the planning process. So then the fun part, executing the plan, right? So how do we, this is where the big Herculean effort sometimes takes place into some of these strategies or programs or projects that we've outlined. So you may need to create some internal infrastructure in order to be able to act on those. So maybe a project management office, the oversight structure, the reporting structure. You may need to invest in software to track your planning progress. And then also it's really important here that we're talking about the integration of this plan into your other plans, right? So an ESG strategy can be really overarching and tie into things like your capital improvement plan, your internal audit plan for the year, your regional planning, if you have really great regional relationships that you can go through this exercise with. And so understanding, how are we going to get this playbook done, who's going to be responsible for what, how are we going to fund it all, right? Do we need to issue bonds to fund some of it? Are we going to have public-private partnerships? That's all part of the execution strategy. And then finally, how will we report out on this, right? Just another arm of that communication that I talked about. And there's going to be sort of two different avenues of reporting. There's going to be some required reporting that you might have, especially if you're funding some of these programs or initiatives through grant funding. You may have required, reporting to those funders that you have. And then some of this is going to be voluntary reporting. Again, that how are you telling your story? So looking at what metrics do we want to measure internally? What metrics do we want to share externally? How are we going to start to incorporate what our ESG strategy looks like in our public relations more broadly? So how do we tell the story of what we're doing related to ESG from an economic development perspective, in our job advertisements, in our placemaking initiatives? And then how do we make this as transparent as possible to the public, to our other stakeholders, to our organization members as we can?
Thanks, Caitlin. With that, we'll jump into how ESG affects issuers. And when we mention issuers, again, these are people that are going to issue bonds to finance projects, either related to ESG projects or otherwise. This chart identifies the many ways that ESG does impact issuers. And one thing to highlight is that a lot of the risk assessment and disclosure assessments that are included on this and the future slides relate to all financings that an issuer may go through. We're going to talk about designated bonds later. But a key part of identifying your risk is that it's going to apply to all financings that your community may do. It requires to identify and understand those ESG drivers and to assess those risks, and take information from the planning process that Caitlin identified to share that information with the rating agencies and investors that are interested in that as it relates to your governmental body. Furthermore, by having an ESG plan in place allows you to identify the potential market or other benefits that may come from a designated bond issue. But this is a good chart that summarizes all the different ways that ESG affects issuers. But before we get to this, another way to look at getting that information, the next slide includes another different matrix that looks similar to what Caitlin identified, but really addresses materiality assessments as to ways that ESG initiatives may have an influence on not only the stakeholders and investors of the community, but also the organization of the internal organization of your community. The key thing here is that this is one example, and that different communities, different geographics, different situations will have different dot points on this. For example, as I said, here in Wisconsin and watched the third day of snow, my assessment on some environmental risk may be different than someone who's in Florida or California. But this is a good chart that, again, identifies as to what's important to stakeholders and what's important to internal parts of the organizations. One item that's not on here, which has come up a couple times in the discussions, is cybersecurity, as to where that is relative to the importance within the organization and to stakeholders. I'm guessing that cybersecurity and how a municipality deals with cybersecurity would probably end up being in that upper right-hand quadrant. Once you have that information, then we can start addressing ESG disclosure. And ESG disclosure requires a comprehensive strategy. First off, we know we both have to address the known and potential risk assessments and disclosures, things that are risk. And most of these risks are probably situations that have already been identified in disclosure documents for your community, meaning that they probably are material and that people have already included information about these risks in your disclosure documents or your continuing disclosure documents. But that has to be balanced with how your ESG strategies relate to being proactive and telling investors as to what you are doing to address ESG within your community. This could be addressing ESG risk or just the ESG strategy as to how you're going to address some of the environmental, social, and governance factors to promote a better place to live in your community, and also a better optics for bond investors. So it's a balancing act, but it's something to take in consideration as you prepare your ESG disclosure strategy going forward. The next slide starts to talk about bond rating considerations. And this slide is a good slide that identifies kind of where bond rating agencies have been historically. Over the last few years, we've seen all the rating agencies, Moody's, Standard & Poor's, Kroll and Fitch all develop some sort of ESG assessments that they apply to your financing. And again, this is an assessment that applies to all financings, whether it be designated or not designated. We're not going to go into the details as to what each rating agency does, but it's important to understand that agencies are completing this assessment. One thing I'd highlight is by going through the planning process that Caitlin identified and having a good ESG strategy, you can be more proactive with the rating agencies and you can own your ESG story. If you don't go through that process, you're going to rely on the rating agencies to complete their assessment of you from an ESG perspective. And rather than being proactive about what you're doing as an issuer, you're going to be reactive to the information that the rating agencies have identified through their data sources. The next slide includes some more information on the bond rating agency considerations. Going forward, I think the key takeaway from a rating agency perspective is that ESG is evolving, and it's still evolving within the rating agencies as to how they're applying ESG credit factors to their ratings. So all issuers should be aware of changing methodologies and so forth to address that again on a proactive basis rather than a reactive basis going forward. And the next slide I want to talk about is ESG investor disclosure. The previous slide we talked about disclosure relating to you as an issuer, but as you enter and create an ESG strategy, identifying what an investor may be interested in from your perspective could help with the marketing of your obligations. Obviously there's a materiality question, and we kind of get into that with the prior slide. But here's an opportunity for you to tell investors what you're doing from an ESG perspective. The city of Chicago just recently completed a financing where they designated a bond a social bond. And as part of that disclosure, they went and identified some of the plans they have within the city of Chicago. An excellent example of how they created an official statement or disclosure document to promote what they were doing. That promotion and that designation was one way to appeal to more investors. And through the basics of bond pricing, more demand actually leads to better pricing. And when better pricing, I mean lower cost of capital, which has lower interest rates, and all around win-win for your community. Once you prepare disclosure to address investor considerations, one thing to be aware of, though, is what are investors going to be looking for going forward. So obviously, this is not a one-time situation where you prepare one disclosure document and you may be done. Be cognizant that some investors may be purchasing your bonds with understanding that you're going to provide ongoing information. So obviously, another way to look at your ESG strategy as being a long-term marathon rather than a short-term race. And the last slide in this section just kind of, again, addresses an ESG disclosure strategy. And the key takeaway here is a couple things. One, working with a good municipal advisor is a good starting point. Obviously, a disclosure strategy here requires not only what goes in the document, but also completing that assessment and planning. Developing an ESG disclosure strategy is probably going to take more people than just the finance staff. You're going to have to work with others within your community to get that information that's needed in order to complete those assessments and prepare the disclosure information needed for your documents. Obviously knowing where you are is an important starting point, but also knowing where you're going is a key part of, disclosure, promoting what you're doing within your community. Again, working with your municipal advisor, working with your council and other people in your working group will help you develop this strategy so that you can address disclosure holistically, not piecemeal by piecemeal.
Thanks, Dave. Hopping into the next section, and one thing that we also are working with clients to do, particularly frequent issuers, is to develop really an ESG related report that can be incorporated into that disclosure that does hit on all those things that Dave covered on those slides. So when looking at the next thing around public finance, really it is oftentimes you hear about bond designations and types of bonds that are designated with an ESG related designation. So, what kinds of things we are seeing in the market, and what has been prevalent in the U.S. are designations around green bonds, um, a climate bonds standard green bond, a social bond, a sustainable bond that aligns with a green bond or social bond principle, kind of a combination of the two. Um, components together to create that sustainable bond designation, and then sustainability linked bonds that have a key performance indicator and sustainable target as a component of that. Again, while there isn't one industry standard, much like you see with with disclosure, there are some prominent, two really prominent standards that we're seeing used in the U.S. And the first is the climate bond standard, which is the highest standard, and then the second is the International Capital Markets Association, or ICMA. Um, that standard is applied a lot in second party opinions, particularly around bonds that are social or sustainable, where the climate bond criteria taxonomy is not available to have that kind of designation around those types of bonds at this point. Next slide. So when you're looking at the types of projects that would qualify to be green projects, again, many of the projects that utilities are financing would qualify as green, but we're seeing now as well that there are projects um, that schools are doing around completing energy efficiency projects, and also things like electric vehicle charging for buses and the purchase of electric buses. Those are the kinds of things that would be eligible for a green bond designation. So, really looking to see if there is some component of a bond issue that would make sense for designation, and perhaps even chiseling off a series of taking that bond issue and splitting it into a series so that you could have a specific part, if you have part that aligns with a green designation and part that doesn't align with the green designation, to be able to separate those in order to help market that one particular bond issue that would be tied to a designation and easy to track, which we could talk about here in a second. So that those are the kinds of things, along with looking at other funding opportunities, that is important. Again, right now, IRA tax credits, that can be a piece of a consideration of what works best for that financing, but really looking at the bond designation as a part of that. So social bond principles are really the element of looking at whether the project itself has a social aspect that aligns with the ICMA standard, which is such things as access to affordable housing. I know that many communities are actively building affordable housing in order to serve and bring people to the community. So that is an eligible use. Affordable basic infrastructure. If you're serving an underserved area and you're extending infrastructure out there, or even in an area where the social economics are not as strong, that would be an eligible use. Schools are qualified as an access to an essential service. Public education actually follows under that umbrella as well. So targeted populations, it helps to have that that specific bond issue project that aligns, but also then the targeted population that's being served for a social bond is another piece that should be highlighted. Living below the poverty line, marginalized populations, people with disabilities. You can see those underserved demographics would also, to the extent that they align that social bond story and designation, becomes a stronger opportunity. Next slide, please. So how is that designation accomplished? Well, there are different ways to look at doing a designation, and there's different considerations. So the climate bond standard is the highest standard. An approved verifier is hired to prepare a report that then is submitted to the climate bonds organization, and then that verifier report is reviewed to make sure that it aligns with the climate bond taxonomy, which is more specific than the ICMA criteria is. So it's really a dual step. It's the highest standard out there for green bonds right now, but it does have more things that have to be achieved in order to get that designation. Um, for a second party opinion, the second party opinion provider is an independent review of, again, the ICMA criteria to make sure that it aligns with the criteria. and then that independent party assurance is provided, and can be included in the offering document to show that um, there is a standard in place that has been adhered to by an independent party. So it gives more weight, maybe not as much weight to the market as the climate bond standard does, but certainly more weight than than a self designation would. However, we do have clients that are entering into the self designation space, and that makes sense for them in that maybe the bond aligns, but to most of the criteria, but they don't have the time, or they don't want to spend the resources to pay for um, that independent verification, or the second party opinion. So it makes sense for them to pursue that self-designation. Typically does not hold as much weight to investors and investment pools that have particular standards around that designation. But that can be a good way to add some visibility to bond issues, and visibility in systems like Emma, IPREO, um, where you can also check the box that is a designation. So kind of just finishing up kind of considerations around each type of designation. I think really it's looking at what you want to jump into and how closely it would align to each of these. And that's something, that you can work through with your working group, and then, reach out to, if the thought is that you are going to get a climate bond, um, verification or second party opinion, to then circle back to figure out what path forward would make the most sense for you as an issuer. Um, so kind of the next slide just kind of focuses on the process that shows that alignment for uh, most of what we see utilized in the US. There are some different, you can look at key performance indicators, but you can also just track the use of proceeds, to the extent that you can show that use of the proceeds is going to the projects that have been identified. You have a process in place to evaluate this and the selection of the projects, those how you're going to manage the proceeds to make sure that that's done in the reporting. On most bond issues, this is something in keeping that wouldn't be too taxing for an issuer to do and achieve. They The market often does want to see that there is some post issuance reporting, and so you know that is one of the things too, that if you're doing a designation through the climate bonds standard, you have to do that, and it's highly encouraged through ICMA as well. And it gives more weight really if you're going out to the market and trying to get that additional investor outreach or pricing benefit. So kind of just wrapping up, these are some determinations when you're making those bond designations, really looking at all these things to figure out what makes the most sense. Not one size fits all. There may be reasons to do one financing as a self designation, and the next financing, really aligns really well. And, you could get some pricing benefits, some better visibility through the climate bonds network, by actually doing the designation there. Maybe it's a larger bond issue. And so those kinds of things are all things that you look at in the course of doing that designation. So again, just to kind of wrap up, ESG really does touch all these things. Hopefully, we've provided some good insights into the kinds of things that you should be thinking about as a unit of public issuer, unit of government, opportunities around ESG. And we see so many uses for a good ESG strategy for looking at financings and really scrutinizing the best disclosure rating strategy and ways to maximize on bond issues and designate bonds. So with that, we want to thank you. We're certainly open to answering questions if anybody wants to hang on and ask a question, or we certainly are always willing to respond to email. So please feel free to reach out to us. We'd be happy to talk with you more. Anything, Dave and Caitlin, and wrap up?
No, thanks everybody for your time this afternoon. And again, reach out to us with any questions.